Thank you for joining me. I'm Alex, and I want to talk about Microsoft today. In my continuing coverage of stocks that really shouldn't be hit hard by the current situation, Microsoft stands out as one of the ones that didn't really get hit that hard, or rather has bounced back quite significantly since the low point. So what they do is software and cloud services, and I think that the cloud services are the more important and more interesting part at this point. And they actually made quite a decent transition over the past basically 10 years towards being, first of all, a very good competitor to Amazon Web Services, and to having their Office products actually be in the cloud, so to speak, and a subscription model rather than buying software once. As a consumer, I kind of hate that, because I would rather pay once and have something for the next 50 years. But obviously, as a company, recurring revenue is much more important. So, current price $157.71. They had a high point of 187-ish before going down to 137-ish. So the bounce back is quite significant here. Still quite a bit off of their high point in late February, and so probably still a bargain if you were going to buy it anyway. Market cap $1.2 trillion still. Dividend yield 1.27%, which obviously isn't a lot, but it's continuing and it's going up and it's very safe. Payout ratio 33%, obviously very nice. You can get companies that pay more with the same payout ratio, but I don't think those are as safe as Microsoft is. Revenue $126 billion, up from 111, and from their year ends in June, so these are pretty old numbers. In the trailing 12 months, they have actually increased the increase in revenue, so I think they're 144-ish billion right now, trailing 12 months. Earnings $39 billion, up from $17 billion. I don't know how sustainable that is, and I would expect that, due to the current situation, to be more on the level of 17 than 39 in the current year. But I guess we'll see how it plays out, and I really don't think that they will end the year without a significant profit. So that gives them PE of 27, forward PE of 25, which is slightly high, but I think justified. And even in the current situation, I think it's justified because of the safety, the dividend, and the growth. Total assets $287 billion, total liabilities $184 billion, which gives them total stockholders' equity of $102 billion, which is up about 20% from the previous year. So again, very significant, things going in the right direction. Everything is going up. Obviously, all of these numbers came before the current situation, and obviously the numbers could be influenced quite significantly if there were a recession to follow. But overall, I would say that as a cloud provider, as a software provider, as a company that makes the revenues basically selling to companies, if there is no significant and global recession, they will continue to make a significant profit over the next foreseeable future, basically. And so, very safe company, safety of principle is very much given here. The dividend is going to stay. It's probably going to increase every year. The balance sheet looks pretty nice. $102 billion in stockholders' equity will get you very far. And so overall, I would say that because of the current situation, if you need a really safe stock to basically balance your portfolio, then I think this is the way to go. Obviously, for a growth investor, there's better opportunities out there. Although, even if you can't get, 50% growth from Microsoft. They're growing at a significant rate, and I don't see that stopping anytime soon. So while it's not a growth stock level, I think that they're growing quite significantly. So even for a growth investor, I think it might be worth diversifying into Microsoft or maybe other fairly big companies that are not growing at like a 50% pace. For a dividend investor, I think the dividend is quite small, but again, it's continuing, it's increasing, and it's very safe. So I think it also makes sense. Maybe not a huge position, but diversifying into it, I think makes sense. And for a value investor, the PE is slightly high, but everything else looks amazing. So I think that it could even be a foundational stock where you have a significant portion of your portfolio in Microsoft and then kind of diversify from there. So as I said, even with a PE or a forward PE of 25, I think it might make sense to buy the stock. Obviously, always do your own research, look at the risk factors, look at the outlook, but especially in the current situation, I think this is one of the safest companies that you can buy. So that's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.